Hi, everyone. We are going to get started in just a second. I'm going to give everyone a few minutes to log on, and then we'll get started. All right. As people are logging on and getting settled in, I just want to introduce myself. My name is Erin Mayberry, and I am Director of Community Engagement here at Rethink Behavioral Health. For any of you who are not familiar with our Rethink ABA startup community, welcome to our webinar series for the startup community. We have created this community to be a resource for any BCBAs and clinicians who are interested in starting or who have recently started their own ABA practice. We're going to be providing a lot more information as we go and at the end of the webinar on that. So look forward to lots of links and things explaining what we do. We are here today with Romeo Clarke. He is a CPA and Fraction Chief Financial Officer and has experience working with small business owners in the behavioral health space to create sustainable business growth. He's also an expert tax strategist and works with clients to maximize tax savings and create more cash flow so that can then be reinvested in business for future growth. A lot of his experience comes from consulting Fortune 100 organizations on risk management and process efficiency around people, process, and technology. As an added bonus, his wife is a BCBA and business owner in Austin, Texas. So he is here today to talk to us about some financial growth strategies when you are starting your own ABA business and things to consider if you have your own ABA business. So I'd like to welcome you, Romeo. Thanks so much for being here today. I know you're stuck in California and not at home in Austin, Texas. So again, big thanks for taking time, and hope you get back to Texas after all that cold weather is gone. But I am going, one more just quick housekeeping thing for everyone who is attending. There are some questions throughout Romeo's presentation that we're going to be asking. So feel free to use the chat option to chat those answers in. We really want this to be an interactive webinar today. And if we have time at the end of the webinar, we will open it up to questions from you. So for the questions, you can type them into the Q&A that you have available. Feel free to do that throughout the webinar, and then we will get to as many of those as we can at the end. This is being recorded, so you will get access to the recording and lots of resources via email sometime tomorrow. And with that said, I'm going to turn it over to you, Romeo.
Thank you, Erin. Thank you so much for having me here. I am excited to talk to you all about, what it takes to, own a ABA business, what it takes to start and expand one. So again, Erin, thank you for that warm welcome. All right, so today I'm going to be sharing my screen, and I want, as Erin said, we want this to be as interactive as possible with the Q&A option. So please jump in there and answer questions, ask questions as we make our way through today's presentation. Okay, so I'm going to start sharing here. And I'm going to go in slideshow mode. Perfect. All right, there we go. So financial growth strategies for ABA businesses. Let's jump into things. So again, welcome to our live webinar on how to build and expand based on a sustainable business model. So, sustainable meaning, we want to build, not just to build. We don't want to build something that would crumble. That means as business owners, we're building strong foundations. Okay, we're putting the right functional areas, the right business processes in place that will make the chances of your business succeeding just much more higher, right? It's not always going to be bulletproof, but we're going to try our best to get there. Okay, so the first question for today's webinar is, what do you wish to learn from today, right? Just just type your answer in the chat. What do you want out of today's webinar? I have a list of things I'm going to talk about, but at the end of the day, you're the audience, and we want to make sure that you get what you came here for. Give folks a few more seconds. Okay, how to build a business, how to grow it. New ideas. Okay, great. How to be successful in starting. Awesome. Where to start, how to start. Great.
And Romeo, there's one that came in through the Q&A, learning tips on keeping the business ethical and cash positive.
Ooh, great one. Okay, awesome. Awesome. Employee retention, expanding, how to plan for financial success. Awesome. Okay, great. Well, thanks everyone for your feedback. Well, I'll keep those in mind as I make my way through the presentation. And at the end, if we have time, we will go through some of these, and Aaron will keep me on top of that. And so let's go to the next slide here. So about me, as Aaron mentioned, I'm a CPA, over 7 years of experience serving small, medium, and large corporations. I serve as a fractional CFO, Chief Financial Officer, serving as a management consultant, accounting and tax planning for my clients, so tax strategist. So, when you think about your business and all the financial aspects of it, whatever surrounds the financial area, that's where I come into the picture, okay? I also have a deep understanding of the operational side of a lot of different industries, right? And with that, I'm able to take a unique approach to how ABA, the operational ABA side works. Consultant for Fortune 100 corporations for 3 years. So, I've worked with companies on operational efficiency, project management. I've taken departments from one area to offshore. So it has have a lot of experience in that realm of things. So I started my accounting practice to focus on ABA business owners, because I feel like there's a disconnect between, the different functional areas that's needed to run a successful ABA business and the clinical side of things. And we want both of those to be connected for our business, again, to be sustainable for the long term. So that's where my knowledge comes in, is to bridge that gap between both the business side of things and the clinical side. As Aaron mentioned, my wife's a BCBA and she owns the ABA practice. So I've been fortunate to be able to see her grow and expand, and how the operations side of things work behind the scenes there. So that's where a lot of my knowledge comes from. Okay, move on here. So our objectives for today. So today I'll be introducing you to business concepts that will help you sustain and grow your ABA practice. We are going to discuss how we keep the end in mind when we're growing and expanding and creating our vision for our company. We're going to go through the steps of scaling and maintaining your ABA practice, that being best practices, key performance indicators, and then we're going to go into some tax strategies and deductions and more, okay? And finally, we're going to talk about how you implement some of these. We're going to talk about examples of how it applies to your business. I cannot give you all the information today on how to scale your business. There is a ton to consider, but what I hope is you walk away from today's discussion with a way of starting that process, right? And to grab a couple low-hanging fruits that you can start using to implement in your business today. Okay, so we'll cover our objectives in 3 lessons mainly today. How you build your financial roadmap, strategic financial roadmap. scaling your ABA practice roadmap. We'll go through 14 steps, and then we'll talk about the business process and how it works. Okay, so common roadblocks and concerns I've heard after having working with ABA businesses for the past few years. One, and a lot of you actually mentioned some of these things in the Q&A and chat function. How do I get started? How do I build my leadership team to scale? How do I get started with enough financing? How do I recruit the best talent and compete with the bigger companies? How do I make confident financial decisions and feel good about them? Sometimes I feel I am on a roller coaster, ending up in the same place, okay? It's like kind of that circle and you're ending up back at the same place. How do I make it out of the black hole of expansion? Revenue slumps, right? You feel like you've been at the same place for years. What do I need to get out of that? How do I expand with cash flow issues, right? Can you expand with cash flow issues? My culture isn't working. How do I fix it? I run my business from checking account. How do I stop, right? So these are some of the things, definitely not conclusive, that I've heard as major roadblocks to a lot of ABA business owners. So my goal is to hit on a lot of these today. All right, so starting with the end in mind. So here's the statistics from the BLS. So approximately 20% of new businesses fail during the first 2 years of being open, 45% during the first 5 years, and 65% during the first 10 years. Okay, those are some staggering statistics, none of which you guys who are listening today hopefully will not be a part of, okay? So here's the reason they believe this is the case, okay? People don't plan, they don't know how to get the right funding, and there is not enough flexibility built into their business model, okay? With these things in your business model, you have a better chance of succeeding and executing right on these things. You have a better chance of succeeding, okay? So lesson one, starting with the end in mind. The important thing here is when you're starting your business, you want to have a vision. Write it down. You want to write it down. You want to communicate it. When you start your organization, you want to make sure everyone, every leader you've hired, every employee that's in your organization, they know what that vision is, okay? If you're not in that room and someone comes in, they're supposed to be able to say, hey, this is the vision that our clinical leaders communicated to us, okay? When you have a vision and that vision is also clinically led, right? That should also be communicated across the other business functions. So they understand, okay, if it's marketing, who are the clients we're after? What's the vision of the company and how can I lead there, okay? Most businesses fail because they don't have a strategic vision in place. One that they're convinced enough to put in the work, right? If you have a strong vision and, but that strong vision doesn't really drive you, then you might need to rework it a little bit, right? Because at the end of the day, that vision is supposed to be so powerful that you fall back on it and say, okay, this is why I'm in it, okay? So that's very important that you have that strategic vision. If you can see the end by planning the end, then you have a really high probability of reaching that goal. I oftentimes give the example of, let's say you're going from the East Coast to the West Coast, right? Let's say from New York to California, and you're leaving New York. You don't even know, you don't have a map of where you want to go. You're just going to keep driving, okay? But you know that someday you want to end up in California, okay? You have no map. Well, you might end up in somewhere like New Mexico, somewhere like Canada, because you haven't really come clear with your vision and how you'll execute it in the form of having that map. So that map will really help you get to your vision, okay? Today, I want to show you what I really mean by that example and what planning for the future financially may look like. Okay, so here is somewhat of a strategic financial plan, okay? Now, this is numbers based. However, I think clinically, you need to figure out clinically, you need to understand clinically, really sit down and say, what's the level of care that I want to provide to my community, and come up with that vision. Okay. And then after you have that vision down, then you want to map out, what are the financial pieces that go into that. Okay. So on the left side of your screen, imagine you're here in 2023 and you have a financial situation. Let's say that you've started the business or you've started this business, and you could even start this and put all zeros into these buckets of revenue, expenses, profit, owner pay, and how much you would reinvest in this. Okay. So this is where you are now. So the important piece in 2023 is you want to write down, how much do I need to live on? If you're the primary breadwinner in your family, you want to know, how much do I need to take home from this business to really be able to take care of myself? If you have another job, right, and you're starting up your business, do you need to have, how much reserves do you need to have? Do you need to have reserves since you have the job backing you up? What does that look like? So you need to write down those financial goals for your near term, okay? Once you have those down, you want to owning on the business and say, well, how much do I want to reinvest? Let's say that I have enough to take care of my family. Am I going to reinvest the entire amount in the business? So once you get that number down for 2023, then you want to look 5 years in the future and say, in 5 years, where do I want to be? Or at the end of, whenever I want to, kind of wrap things up with my business and I really don't want to be in this business, what does that look like? A future goal could be something like, I want to sell, or I want to have a leadership team where I'm just an executive chairman of my company, and I don't really do any work. I collect a passive income. Knowing what that is. So this is the exercise I typically recommend as a business owner you do. You sit down with your spouse, your family, and you say, okay, in X amount of years, where do you want to be? I want to be on the beach somewhere watching my grandkids. I want to have this house. I want to have this boat. I want to have this, this, and this. And you write that down in terms of what are the yearly costs associated with those things. So now you can come up with, this is how much I will need to live that lifestyle that I want. And then you want to write those things down in the future because that's your North Star, right? In addition to, as I said, all the clinical goals you want to meet. So let's say in this example, you want to sell the business for $3 million. That's 6 times a certain multiple. EBITDA, okay, we're not going to have time to go into this, but it's earnings before interest, tax, depreciation, and amortization in your business. Okay, so it's basically revenue minus the operating cost of that business. Okay, that's your earnings before interest, tax, depreciation, and amortization. Let's say that goal is 500,000. Okay, 500,000 is the number they use to multiply a multiple by to say, how much is your company worth? Okay. And then you have a passive income goal. Let's say you're not planning to sell, then you want to say, I want to live on, example, $200,000 a year. Okay. And that could be a percentage of your EBITDA. Okay. So I now have the current, I have the future. So in between the current and the future is going to be a time frame, and it's going to be execution to get to your goals, right? So how do you execute? How do you sustain the business? How do you gain stability? And that's what we'll spend some time going through in this presentation, all right? That's the middle part here where we have the question marks. Okay, so how do you think as an ABA practice owner, you can get from where you are now to where you ultimately want to be, where your goals are? And if you're not a practice owner right now and you're in the initial phases, how do you think you can get to your goals, right? So let's comment in the chat, put down some ideas. We're not worried about being right or wrong here. Erin, do we have comments in the chat?
Not yet.
Not
Everyone
yet.
wants to take a minute to look at that question. Julia said, hire employees, minimize taxable income.
Okay, awesome. I love that one.
Using a pro forma and budget.
Oh, that's a good one. Great. That's a good one too.
And hiring staff and finding clients.
Great. Awesome. All great ones, and ones we're going to talk about today. You guys can keep adding those. I'll continue through the presentation. All right. So, let's say you haven't started your business yet, right? So I have this roadmap to start your business that I've prepared, and I'll go through this, but I won't spend a ton of time on this. I'll, at some point, maybe Erin and I can talk, and we'll kind of dive into this more on how you kind of start things off. But as you see here, from 1 to 14, these are the steps, not in any order, that you need to do in order to get your business going in the ABA space. So you want to have a business plan, right? Your business plan will have, what your financial plan is. Your business plan will have what areas you're servicing, what's your vision, what's your mission, where do you want to go with this business, what's your marketing plan. It will outline all of that. Okay, so a business plan is critical. It's kind of the map I was talking about when I was referring to my example. Then you want to talk with attorney, you want to talk with a CPA. Why? Because they will tell you, hey, you know what, this is a good idea, or this is not a good idea. They'll tell you about risk. You have different attorney for different things. Some attorneys focus on, business related things. Some focus on HR related things. So you want to have kind of a few different attorneys to talk to you about what you're getting into. And a CPA pretty much will help you with, knowing from a compliance perspective, what you need to consider. A CPA could also help you with some pro forma, some financial planning. Okay. Then you want to register your business in the applicable state. I'm a big fan on the state level to be an LLC, because it does protect you from a certain liability to a certain degree. So that's important. And then, from a tax perspective, you could be taxed as a different entity, a corporation, an S corp, a partnership. So these are things you would also be asking your CPA. The next, you want to get your operating license. There are some areas, local areas, where you need operating license for, especially if you're going to have a clinic, you're going to have a presence in that area. Then you want to have your business files documented in some place, right? It could be cloud-based, just scan them all in, your EIN, your certificate of filing, all of your LLC documents, okay? If it's a partnership, your partnership agreement, and if you have partners, if you have other stakeholders in the S corp, you want to have all those documents in a good place. Then you want to consult with an attorney and CPA again. So I think you see that I am hitting on this point a lot, not because I'm a CPA, but because an attorney and CPA can be one of the most important people you engage with during your journey. And then you want to begin your credentialing process. You want to have some kind of outbound marketing and referral strategy in place. Begin to look for a clinic space if you're going to be in clinic versus in-home, or both. You want to choose your data and practice management software, which is where Rethink would come into play. You want to choose a payroll provider. There are a lot of payroll out there. Do not do your payroll by yourself. There's a lot of problems I've seen in the past with business owners who have no idea about what it means to run payroll, and they get in a lot of trouble. You want to choose your accounting software, and you want to start off with accounting on the right foot. Okay, you want to start vetting and interviewing potential staff. You want to hire those staff, and then you can go on your journey in opening clinic and begin operations. Okay, so that's kind of a roadmap again for starting. So then we have a roadmap for scaling. Okay, so from 1 to 14 today, I'm going to spend time going through each of these, but we all know how this goes, right? We have a plan, and then what happens, right? We start here, then we end up here, then we end up at, we're all over the place as business owners. because business is not, it's not linear. It's not meant to be a straight line. Things happen that moves us around. And that's why when I said you have to be flexible as a business owner, that's what I meant by being flexible, is the ability to move around and put processes in every place that you go. Okay, so let's go through each of these. So the first one is having 3 months of cash reserves. So this is the first step I recommend when owning your business, starting your business, because you want to have some kind of backup. You are going to have employees that you're responsible for. You're going to be responsible for people who need to take care of their family, right? So the last thing you want to do is tell people you can't run payroll because of some reason. Okay, so you want to make sure that you have 3 months of reserve. Don't wait too long to do it, right? You want to kind of start this and build on it as you grow your business, because it will be more challenging if you get to be super huge and then you have to come up with the reserve. It'll take a longer time to get to this number. So how do you calculate this number? You take your average monthly payroll and your overhead, selling goods and admin, and then you multiply times 3. This will give you a 3-month reserve goal. I recommend keeping this in, the safe business bank account. I recommend to keep it away from your operating account, okay, where, the account that things goes in and out, because again, it's a reserve, it's for a rainy day. So tips for cash flow: know your margins, okay? So you build cash flow from your margins. Cash flow can help you to build your reserves. You can also get cash flow from other means, like, you can pull debt, you can take on additional equity owners in your business, but for a lot of business owners out there in this space, they may not want to do that. So you want to build your reserve from cash flow. So you need to know your margins. How long will it take you to build up that cash flow? That's where the financial plan come into place. Reduce time from service delivery to collecting from insurance. So cash flow is, I do my services today and I get paid maybe 30 to 45 days down the line. My cash flow doesn't happen today when I do this service. Nope, no money comes in my bank. Money comes in my bank when my payer decides to pay me. So you want to bill up as often as possible so that you can get cash coming in the door. And you want to have a good follow cadence with your payers. You also want to know how much money you need to take out of the company. As I mentioned earlier in the strategic planning slide, you want to know your goals right now. So if you need to take out an owner's draw X amount of dollars to take care of your family, you need to calculate that in your cash flow, because it's after that number that you're going to calculate how you're going to get to your reserve. Okay, so positive cash flow. A business that continues to lose cash with no plan of profitability is like a blind man leading a group across the freeway. With COVID that happened a few years ago, we don't know what could happen, right? The economy could tank. There could be another economic downturn that just is caused by natural disasters, right? So how do we prepare and plan our business for that? You need cash flow, okay? Our business model is we want to plan a business that is going to be cash flow and not one that's going to be losing money. So again, you must find a way to cash flow. If you burn more cash than you bring in, you will be out of business faster than you know it, okay? And that's just an important no. So next question is, how many months of cash is recommended to have in reserves? Not a trick question. We went over it earlier.
Everyone's responding 3 so far.
All right, y'all, you all have that right. 3 months of reserves. You never know again what could happen. And your employees will not stay around for you to tell them, hey, wait, I don't have reserves. Keep doing services. They're not going to stay around. They have bills to pay. They're going to go to the next employer who can take care of their needs. So number 3, thanks everyone who answered that. Number 3, new clients, new hours monthly. A company that's not growing is in neutral. If you're in neutral, your business is going uphill and you're rolling backwards. That's what I consider a company that says, I'm not growing. That's what I hear. You're in neutral. Owning a business is going upwards and you're running backwards, okay? If you don't have a plan to grow, you will continuously move backwards. So I talk with a lot of ABA business owners, and a common problem is them being on this cycle of, I make some money, I pay my employees, then I end back up in this cycle of not really propelling in the future without any real progress. And I boiled this issue down to, you're losing more clients than you're intaking. Are you losing more hours than you're adding, right? So get those assessments up, right? And start getting clients in treatment. This is what's killing your business model. In addition to, I'll point this important piece out. If you don't understand your ideal client and your vision doesn't include who your ideal client is, your avatar of a client, you will run into this issue of feeling like you're on a cycle, because people are leaving because they're not attached to a certain vision, okay? And you're trying to take on people, but it's not a net positive. So you're feeling like you're in this cycle. So make sure that you're delivering at first clinical excellence. Then second, you're taking on more clients. Okay, I'm going to repeat that. Make sure you're delivering clinical excellence. Then you're taking on more clients and serving more clients in your community. Okay, so that's important. I always say, your first customers are your employees. And I'll say this again later. Your first customers are your employees. Then your customers are your actual clients that you're doing treatments on. Okay, so you want to always make sure that you're taking care of your employees and you're also taking care of their customers, which are your clients, right? Getting additional hours mean you're making sure that you're keeping a good eye on your authorization and your utilization reports, seeing what amount of available hours are being served across all available codes. Because what you find is, you have X amount of clients, you have your authorization for these clients at X amount of hours, but you may not be utilizing all those, right? There might be some challenges with scheduling, availability on the parent side, and your employees' availability. But when you all factor all of that in, you want to make sure that you're maximizing those hours. Beyond that, you're putting a marketing plan in place to get additional assessments coming in so that you can put additional clients in treatment, okay? If you notice your hours are not being met, and you're closing in on your authorization period, what can you do right now to take advantage of some of those hours? If you're not tracking that, you're losing a ton of opportunities in your business. A lot of time you can just run the numbers and see, well, if I just go out and hire these people, I could make 3 times the amount of profits than if I were to just leave it. Okay. Erin, can you hear me? My screen went out there for a little bit.
Yes, we can still hear you.
Okay. Let me stop share and share again. Screen. Share screen. One second. All right, and then this share back up. Okay. Okay, Erin, can you see my screen?
We can.
Okay, perfect. So let's continue on here. Referral sources. So it is important to get plugged into professional connections in your service areas, right? So I'm talking about psychologists, doctor's office, offices that does assessment for the clients that you take on, doing some level of outbound marketing in addition to those things like advertising your services on social media, getting digital, having your website done properly, all of that will lead to more business. Okay, so get plugged into professional. Make sure that your information is updated with your payers, because they're going to be reaching out and they're going to be trying to provide clients to you. So you want to make sure that they have a way of contacting you. So tips for keeping a strong referral pipeline. You want to have a database of active professionals in your area, right? You want to have a continuous cadence of following up with them, seeing how they're doing, having coffee, having lunch, right? There's no excuse for that. If you don't, your competitor is doing it, okay? You want to send thank you notes for your people where you're getting a lot of referrals from, because you want to keep that going. Staff capacity. If you don't know what your staff capacity is, how can you truly understand, you know, how when you need to hire, right? And when you need to cut a little bit of fat. So always know your staff capacity. Have a dashboard, a spreadsheet that calculate, you know, what downtime is there in your business and who is available, so that you can know what clients you can take on. Okay, so I have some formulas here for measuring staff capacity. So for your BCBA, you're looking at, you know, how much hours is your BCBA available? You're taking away their supervision schedule time, parent training, and then you're taking away their admin time. Those are the current factors. Whatever is left over is their availability. You notice I'm taking away admin time. I'm taking away schedules, you know, supervision they are already doing if they're doing assessment and parent training, taking those away. So what's left over is their capacity. Program supervisors, if you have program supervisors, you're looking at their total available time, you're taking away what supervision they currently have on their schedule, and then the admin time they have allocated for your business, and that gives you your availability. RBT and BT availabilities, you're looking at their total availability, and you're taking away their direct schedule sessions and their admin time again, that they would have to do other things in your business. So that would tell you their availability. Hiring. Hiring can be one of the toughest practice areas in your business, you know, but people interestingly spend more time on marketing than they spend marketing for new customers than they spend for hiring. But the way I look at hiring and recruiting is it's literally sales and marketing, right? I put sales and marketing in that category because you're selling your business. You're selling your business to your clinicians. You're selling it to your RBTs, to your BCBs. You're selling your business to your next candidate. So make sure that you have an understanding of who your ideal employees are, and they see it on your website who are the ideal people that you want to work in your organization. Make sure you have pamphlets, make sure you have brochures, make sure you have digital content and on your, you know, of the ideal people that you want to hire. Okay, you want to be known that, hey, I am hiring, I'm looking for the best in the market. Okay. Your current staff, you know, when you can get referrals from current staff for people who they think you should hire, there's a study that the chances are high that, you know, those people will be similar to those current staff. So if you get a good referral from a current staff member and they're a pretty good worker, the chances are higher that you're going to get a good staff. You know, now you have to make sure that you have policies and procedures in place that obviously make sure people are doing their job, not wasting time. But it's just know that, you know, having a good referral base in your current staff is important for culture. Okay. Culture, building a good culture is important. You know, culture comes from top to bottom, and it can also come from bottom to top. You want to make sure that starting with your vision that I talked about earlier, that your employees understand your vision and know what part they play into that vision. Okay. Building a culture around your vision is so powerful. Okay. Because people want to attach that vision. They all feel like they're moving towards a North Star. So it's very important that you build that. You want to reward people who are doing a great job in your business. If you don't, there are other businesses and competitors that are going to reward them. Okay, so you want to have some bonus structure in place to reward your people. Tips for hiring: set a budget on, that's variable based on needs. So I recommend to look at, different places that you go to hire, whether that Indeed, whether that be referral. And I recommend to have a strategy that combine a different amount of budget. So you could do, hey, I'm giving $250 for staff who recommend people that are successfully hired, right? Within the first stay with us for the first 90 days or something like that. And then you would also have a strategy that says, okay, we're outbound, we're calling people that apply through our Indeed, right? And I'm allocating X dollar amount to my Indeed budget, right? And, so that's how I would approach it from a budget perspective. Everyone you've looked at during your hiring process that didn't make it through because there was someone that's a little better, you still want to keep in touch with those people. So I recommend having a database of people who've just been in your hiring pipeline, but didn't make it because there was somebody better at that time. People may not be a good fit today, but they may get the qualifications tomorrow. They could still be in that field, especially if they're, they just started in the field. You might have interviewed them as a RBT, but they become a BCBA in a few years, right? So keep that list, have your recruiting team call that list when you're trying to hire. It's not a waste of time, okay? It also reduces your cost of hiring because these people you've already spent the money on, and you already have them in your database, okay? Okay, reinforcing staff. So I talked about, you want maintain positive morale in your business. You want to show appreciation to your staff that are doing a great job. Appreciation can be in the form of monetary or non-monetary. I always recommend a mix. Okay, so you want to give bonuses to people who are performing high performance, that are doing great billables. People who are going above their job duties, you want to make sure that they're being rewarded. You want to pay them out. So this is another big one. I don't recommend paying out before you see cash flow. You want to match it up really well, right? So if your insurance company is paying you up to 30, 45 days, why would your bonus structure say something like you get paid out right after you do services or something less than 30 or 45 days? You never know what could happen. So I recommend kind of think about that and that strategy and the timing so it makes sense and doesn't hurt your cash flow. Other things you can give, gifts, birthday cards, holiday party, those are all good things that will build morale, okay? Don't set unrealistic expectations. So don't come out, boots kicking out, giving employees all these things when you're just starting off, because people work in a way where, expectations get built. And, if next year you're not having a good year and they don't get what you did to give to them last year, that kind of hurts your morale. Okay. So you want to kind of scale up with your giving as your business grow. You want to do surveys. You want to hear from your staff. What keeps them happy? Is it money? Is it gifts? Is it a holiday party? These surveys will kind of give you a handle on what people want. Again, set up bonus structure for billable staff that meets certain threshold, incentivize and motivate them. Okay. Question. So I think it's a good break. I know I've been talking for a little bit, but how do you reinforce your staff members today if you're operating already? What do you do? Monetary or non-monetary? You can even be a little bit more specific. So Erin, let me know. They're commenting in the chat.
Bonuses, group events, incentives, and social outings.
Okay, awesome. That's great one. Virtual outings,
Gift cards, praise, annual bonus, performance bonus, monthly get-togethers.
Awesome. So great.
Employee of the Month award.
Oh, great. That's great. Great reinforcers.
Pizza parties. I'm going to join that company for the pizza parties.
Parties. Awesome.
Showing care for employees as people outside of work and benefits with continued education. Staff kickbacks.
Awesome. Great. Token system with different tiers. Awesome. You know, remember, I said it, I'm gonna keep saying it. Who is your first customer? Your employees. You need to take care of your employees so they can take care of your clients. That should be a part of your clinical quality framework, right? Take care of my staff so I can take care of they can take care of my clients. You know, I don't care what business you're in. If you're not taking care of your staff, they're not going to take care of your clients. So that's very important. Thank you for all those who commented. Okay, onboarding new staff. You know, having an efficient onboarding process for new staff members can save you money, right? And provide a positive experience for new employees. It's like, you know, you're going on a date and you show up to that date and you're in your best dress, you're saying the right things, you know, chances of that you getting the next date is going to be high because guess what? You know, you came in with a positive impression on first sight, okay? So you're starting off with this good reputation and that will follow you and follow your employees throughout their time with you. All you need to do is execute from this point on. But if you have a not so good onboarding process with your employees, you know, that damage moral from the beginning, right? They come in with a list of expectation of like, things are kind of unorganized here, you know, we don't know who does what, you know, that kind of travels with them and their experience. It's going to take a lot to get them back into a positive thinking. So I really do recommend spending time building out your process, your onboarding process. Make sure people are getting the best experience, better than your next competitor, okay? Your process needs to be consistent, repeatable, and to the benefit of all stakeholders involved, right? So consistency, meaning, you know, you don't onboard this same level employee like this and then change that, right? One, that takes a lot of time to repeat. So you want it to be repeatable, consistent, again, repeatable. So you want to build these processes out so you don't spend a ton of administrative time trying to bring people into your organization. And it must benefit, again, the new staff and also the people who are doing the training, right? You know, oftentimes we think about those who are, you know, benefiting being the people like the employees who are onboarding, but the people who are given the training, this must make sense for them. This must feel like something that's rewarding for them too, okay? So tips, record training videos and have new staff watch them, okay? So if it's repeatable and it's the same thing, you know, record it, right? Yes, we still want the human factor to it, okay? Don't just have video recording, nobody on the screen, you know, that's boring, all right? Have an organized training plan for each role. Define roles and responsibilities. This is so important. Don't hire anyone where their roles and responsibilities just kind of unaligned. You're not sure what they do or they're not sure what they do. It must be clear. Do group sessions when possible, right? You don't have to have everyone in a one-on-one training session. So this could be for general admin information, general knowledge education, okay? So if it can be transferred between multiple roles, do it in a group setting or multiple people, okay? Non-billable time, okay. I think understanding where your non-billable time comes from, this is time that you cannot bill to your clients, to the insurance payers. You need to track this, okay? And you need to have an understanding of what that should be. So, for example, you're saying, looking across your entire organization, your staff, your clinical staff, and saying, okay, what, you know, what's our non-billable? What has it been? Is there a way we can streamline things? Remember, clinical quality, excellence. We want excellence. What is the minimum amount of non-billable hours would it take to give us excellence with the services we provide and also keep our staff moral at top level and keep our staff engaged? Come up with that number, track it, see who are abusing your policies. So that's my big recommendation here. You want to set the expectation of what those numbers should be once you do that analysis. if you've had your business for some years, if you've been tracking this, or if you haven't, I recommend going back and seeing where this number has been. Do you feel like it's been abused? If so, then you might think about reducing it. If you feel like there's a quality issue, you might need to increase it, so you just need to think through that. Do that. But start tracking today. It's never too late to start tracking what those non-billables are per staff members, and make sure staff stay within a healthy, non-abusive stage with those. High non-billable means you could be losing cash flow. So always keep that in mind. When you have a higher non-billable, those are not getting built out, but you have to pay your employees for them. So keep it at a level consistent with satisfactory client quality service. Okay. Consistent billing and tracking. Okay, you want to bill consistently. I said earlier, cash flow is important. If you have a good medium between how often you bill and how you track your billing cadence, then you're in a good place. I recommend once per week, to be honest. I say once or twice weekly, but I think once is a perfect place, because it gives me enough cash flow understanding of projection of cash flow, and we typically will keep cash flow projection on a weekly basis. So this kind of aligns up with that, ensures like a smoother cash flow model, okay, and prediction. You want to be monitoring and following up on account receivable. I've talked to people who don't even record their EOBs. How will you know what's owed? How will you know what's been denied? I mean, how can you run an organization like that, right? So it's very important to know on, a consistent weekly basis, who is paying you and who is not. Who do I need to get on the phone with? If your biller isn't doing that, you need to make sure that they're doing that. Systems such as Rethink sets you up to be able to achieve those goals and see those metrics. So you want to make sure that in your practice, in your data collection practice management system, that you're kind of know what you're billing out, right? So you have a clear understanding of what's getting built out. And if you're not receiving that money that's coming in, okay, you need to look into your AR. You need to track the frequency of your payers. So, how often do your payers pay you, right? Do you have 80% in that 0 to 30-day bucket, and then the other 20% over the next 60 to 120 days? What does that look like? Or do you have all 80% in 60 plus days? That's not good for cash flow. So you want to know what those are. Billing tips. Bill as often as it makes sense for your business model. Understand who your payers are and their schedules for paying you. Keep your practice management platform organized and updated. Keep it clean. If you talk to me and I ask you for an AR report for X date, as of X date, and you can't provide that, that's a red flag that you don't have a handle on it, okay? It's worth paying for a good biller, because a bad one can stop up your cash flow pipeline, and cash is king. Your employees need to get paid, and you already paid them, so you definitely need that cash in. So you want to track your payer frequency to set up cash flow processes properly. Tracking financial key performance indicators. Don't just track it to track it, but do it because you can learn from it. So you want operational key performance indicators. Key performance indicators are indicators of what it takes to, get to a certain goal, right? You have a certain metric, right? Let's say that, your RBT is supposed to be 90% billable to payable, right? So of the total hours they work and getting paid, 90% of that is supposed to be billable. How do you track that? How often do you track that? Who tracks it? Who looks at it, right? You want to have these things in place. So operationally, you want to have these KPIs, and there are financial KPIs too that we're going to talk about here shortly. But monitoring your financial statements also will allow you to make decisions from a financial standpoint rather than intuitively. So you don't just say, I think this is, no, we're working based on numbers, right? So from a KPI perspective, garbage in, garbage out, right? You can't look at a KPI that's wrong and make business decision, because you will make the wrong business decision. This goes for both practice management and your accounting software. Any software you have in your business where you have to input data, you want to make sure that that input is accurate, okay? You want to track your numbers and your margin. You want to use accrual accounting to tell a better story. So I usually get a question, what's the difference between accrual accounting and cash accounting? Simply put, cash accounting is saying cash coming in, meaning whenever I get paid by my payer, it hits my bank, that's my revenue. I'm recording cash. Expenses is whenever it goes out of my bank account, that's my expense. And then my cash minus my expense equals a number, right? And that's how much cash I have left over. Does that tell me how my business is performing? No, because when I do service today, I may not get paid for 30 to 45 days. So if I look at how much I'm paying my employees for the cash I receive today, guess what I'm looking at? I'm looking at cash for services that have been done 30 days in the past, but I'm paying employees today. So it's not apples to apples. It doesn't tell my productivity levels, and you can't really make decisions based on that. So you could say my business is performing great because I collected a lot of cash based on past billings, but then my payroll right now is lower. So I have a huge amount of cash coming in. Does that mean my business is doing really well? Not necessarily, because you may be having a terrible month of billing, which is what we consider revenue. So now what is accrual? Accrual is saying you bill this week, you bill for a period of time, that total billing minus what what a level of amount you won't be collected based on history, so what the net amount of billable that's reasonably expect to be collected, right? What you bill out that's reasonably expect to be collected. I'm recording in that month, okay? Minus the cost of doing those services, my employees right now. And that tells me really what my gross margin is right now. And I can look at that from a productivity level and say, what is it taking me to generate this revenue in the same period? That's when I can really tell what my numbers are telling me in my business. So you want to create a great process for financial oversight, right? You want to kind of have that financial strategic plan all laid out. You want to make sure there are controls in your business so nobody's stealing in your business. There's no fraudulent activities, okay? You want to check your productivity on an ongoing basis. I talk about billable to payable hours. You want to track that. You want to talk about how payroll is increasing relative to how much your revenue is increasing. You want to look at your gross margin percentage, and you want to look at your top 5 performers in your business to make sure you reward them. Other KPIs such as overall productivity per employees, cash burn rate, how often do you burn out of cash? If your cash balance was this, then this month, then this next month, you can kind of see how much you're burning out of cash. You want to look at, hopefully you're not burning out of cash. You want to look at average outstanding receivable days. So, if is my receivables typically 30 days outstanding, 40, 60 days outstanding? What's that number? The lower it is, the better, okay? You want to look at your marketing budget ROI. If I spend $2,000 on marketing, how much am I getting back in clients and hours? You want to look at days to onboard new clients. You want to look at client churn rate, right? How much client you offboard versus how much client you intake. I think we got a chat here. Oh, okay. Tax planning for cash flow. So tax planning is important. Again, the important thing to know about tax planning is, you can plan your tax in a way where you're saving on taxes, and that money that you would have been paying in taxes, you're taking and reinvesting in your business. This means that you're actively engaging in a process to make sure you're not overpaying in taxes. Someone is looking at everything you're deducting in the business and making sure you're deducting everything in the business 100% how it's supposed to be deducted. In addition to this, someone is looking at your personal life and saying, okay, who's paying the healthcare in your personal life? Can we have the business paying this? You're buying a car. Can we have the business buy the car? Right? So there are different things that you need to consider that a tax professional would know. Okay. You want to make sure you're making estimated tax payments so you're not paying a penalty at the end of the year. You want to do a tax forecast so you know, hey, how much would I need to pay in taxes at the end of the year? How much should I make in estimated payments? Maximize your tax deduction by taking advantage of home office, meals, vehicle, rent, and other deductions. These are kind of key areas that you want to focus on. Again, home office, your meals in 2022 was 100% deductible. I think they reset to normal 50% level. But if that activity is for your office, can be 100% deductible. So you want to make sure that you're taking advantage of those. Vehicle, right? You can depreciate a vehicle. You know, a lot of over the past few years, we've been able to do 100% bonus depreciation with Section 179 for the entire cost of that vehicle, right? Is there some strategy like that that can be put in place? You can rent out your home to your business for up to 14 days during the calendar year, right? That's called the Augusta strategy. Are you taking advantage of those strategies? So you want to sit down with someone who can look at your situation and show you the actual tax savings that you can achieve. There are larger strategies that you can use, like you can acquire real estate. Let's say you're purchasing, you're leasing clinics. What about purchasing it? What does that look like from a cash flow perspective? Plan, budget, forecast. Now, I've been talking about planning. This includes, you know, when you want to set a budget, you want to say, you know, what's my budget amount? Okay. What's my actual amount and what's my variance? So every month you want to do that so that you can really know, am I overspending in my business based on what I planned on, or am I on track? Okay. If your budget number for 3 months is the actual has been changing, then you want to revisit that budget number and make sure that you're on track. Remember, this is a map. Okay. You know, you want that map to run your business. The budget and the forecast are great tools in that map to make sure that you're going in the right place. Divide your budget into 2 areas: fixed, variable costs. Okay, fixed costs don't really change much with your revenue unless you're really going above and beyond with spending. So with growth, if you need to add another clinic, then your revenue changes above your current clinic space, then you need to get another clinic. Okay. Those are my budget and forecast. And then rate negotiation. I think the important piece here with rates is, you know, you want to go into have a process for renegotiating rates, right? We know it's typically hard to get rates to change from insurance company to insurance company, but you want to have a process in place where you're revisiting this with your biller or whoever is doing your rates negotiation and say, hey, it's not sustainable to run my business at the current amounts you're paying me right now. And you want to have data to back that up. Look at your cost of living in your area, do survey patient satisfaction, maintain data such as utilization, revenue, and expenses. This will be important during your rate negotiations. Finally, bonus, financing, and expansion. Just know that, you know, to expand your business, there's 2 ways, right? You can do it with your own cash as you're cash flowing, or you could do it with debt. That means you're taking on debt to finance future growth, to bring in cash, but that will be on your balance sheet and you'll have to pay an interest rate for those debts. Okay, so that's a cost. Now, the other route is you could give up equity. Equity means you could bring in venture capitalists, you could bring in private equity money, but they're going to want a piece of your business. Okay, or you could do friends and family, give them part of your business and they give you cash to expand. So these are 2 financing options I often see. One is I'm giving up a piece of my equity company with the equity financing, and the other is I'm giving up debt. When you're trying to make this decision, it's important to sit down and look at what are your goals, where do you want to go, what's your position currently, and talk to a professional. Okay. All right. So Erin, I think that's it. So what has been the most effective way to gain clients for you? I think this is the last question. And then we are good to go. Yep.
If anyone does have clients already, what has been effective for you guys? Feel free. Julia said referrals and insurance.
Perfect.
Building rapport with referrals, like pediatrician.
Awesome. Great, great. Those are some great ways. So make sure that you guys are capitalizing on these ways you can take on more clients, right? Because again, if your business isn't growing, you're not maintaining clinical quality, then you're suffering. Someone said referral from former clients. Okay, if you weren't doing a good job with your former clients, would they refer a new client? No. So you want to make sure that you deliver clinical excellence so you can keep those referrals coming. All right. All right, Erin. Did I miss any questions that were asked during the presentation, Erin?
No questions have been asked. I know we are over time just a little bit, so if you do need to hop off, I just want to quickly mention that you will receive an email with the recording link as well as other useful links that we've shared today in the chat. So look out for that tomorrow. If you do have a second to stay on, then feel free to type in the questions either in the chat or the Q&A pane. We did have one just come in, Romeo. What bookkeeping or accounting software do you recommend?
So I do recommend QuickBooks. We do use QuickBooks a lot. Might be a little biased, but honestly, it's the best out there. There are other tools out there like Xero. There are some other smaller software tools, but QuickBooks, I've found QuickBooks Online to be one of the most robust, up-to-date software for business owners. It provides all the capabilities of full accounting cycle, transaction recording. So that's what I recommend.
Awesome, thank you. We have one more question, and I just popped up on the screen a webinar that we are hosting on Valentine's Day. So if you are interested in other Rethink webinars, we will have our next guest with Amy Gravino, who is a woman on the autism spectrum, and Dr. Bridget Taylor, and they're going to be discussing sexuality and the spectrum. So use that QR code if you want to register for that event. And then one more question, Romeo. What's the most common way to have revenue to start a business?
Oh, I was on mute. So the most common way to have revenue to start a business. I think the question might have been the most, if I could rephrase it, what's the most common way to have the cash needed to start a business in the beginning? Similar to how I wrapped up the last slide there on the presentation, it's going to be, you could either borrow from family or friends, okay, to have the cash flow. Maybe you had a job, you saved up the money and you have it available. So family or friends, your own cash that you saved up, or you're going to look for a loan. Okay, now typically loans from banks are harder if you don't already have an existing business, or so loans from bank are harder if you don't already have an existing business, or you're not trying to acquire another business. So it's typically harder for new businesses to get loans from the banks. But there are resources on the SBA website that can help with new startup loans. So I don't want to discourage you that that's available. It's just a little harder, and you want to have your business plan in hand. Another way is you could partner with someone who maybe doesn't have a clinical background, but has the available cash. You can say, hey, I have a great business model. I can provide clinical excellence. I have a great vision. This is my business plan. This is the returns that I can expect within the first year, 2, 3, 4. Are you willing to invest in my business? They could say, yes, I need a percentage of the business. We could be a partner. You pay me X amount per year in return, and I would own a piece of your business. So that's another route. And friends and family, again, you can get a loan from them. They can own a piece of your business, and you can, again, pitch them on your business plan. So those are some options that you have available to you.
Thank you. I want to be respectful of your time and everyone's time. Do you have one more minute to answer a last question?
Yeah.
Okay. We have a question about payroll provider recommendation.
Payroll provider, one that's been really good to our clients, and I've seen in other industry, is Gusto. Gusto is a online cloud-based payroll provider. So let's talk about payroll provider a little bit. What they do is they will take your payroll information, manage your employees from a perspective of making sure that W-9, W-4 forms are filled out. The employees get the W-2 at the end of the year, or 1099s. They'll make sure that all your filings on a quarterly basis to the government and to the state is taken care of, so you don't have to worry about any of that. Gusto is a cloud-based system that kind of package all of that together for you for a monthly processing fee. So Gusto, I know Paychex is out there that does it too. Even QuickBooks done it, but I've heard the most success through clients with Gusto.
Great. Thank you for all the recommendations and for all of the tips that you shared today. I know we've gotten a lot of chats just thanking you for a really useful webinar and a really useful presentation. So hope you guys have a lot that you can take away from this. And like we've mentioned, all of this information will be available via email by tomorrow. So you will receive an email from us. Romeo, thanks again so much for your time. Truly appreciate all of the expertise that you brought to the startup community, and hope you get home safe to Austin, and hope it gets warmer there for you.
No worries. Thank you for having me. It was a pleasure, Erin.
All right. Have a great week, everyone. Talk to you soon.